Moving on now, let's welcome in our next guest on the show. Amit Jeswani, founder and CIO of Stallion Asset, is joining in. Amit, are you already all set for the Holi party? Okay, we've still got you in office, so I guess, yeah, still working. But tell us, I think this Holi, the only one color that the market has shown people is red. When will the green show up?
Hi, Surabhi. Good afternoon. Thank you so much for having me on your show. I hope it comes soon. The green color, that's all I can say. But it's going to see the bear market's been very painful, to be honest. We've also lost money. No one can be spared in this kind of drawdown. We've also lost some money. But the thing is that you have to survive. And those who survive this bear market will be very rich in the next 2 years again. It's the same cycle. If anyone stays in the market for 5-10 years, survives the bear market, makes it large in a bull market, you end up doing okay. And in fact, you end up doing very well. You just have to survive these times. Don't be super extra, like this is what I'm trying to do. I don't know what is right or wrong, but I'm trying to, we've come on some cash, we've taken some defensive bets. We are just chilling for now. We have nothing to do because there's no new trend which will come. Don't just average down the winners of the previous cycle.
No, Amit, exactly. Amit, allow me to come in over here. And I'm just saying this for the benefit of viewers who might not be fully aware. I mean, we all know that you have followed the whole growth investing philosophy to the T, and it's worked wonderfully well for you and your investors, right? You've had some of the highest growth stocks, high momentum stocks in your portfolio, and that's been your stated investment style. Have you changed that approach, given that now this has become a 5-month-long correction, not a quick V-shaped one?
So actually, our portfolio started falling we made lifetime highs in December, and only in January our portfolio started correcting. In fact, from October to December, we were up, I think, 5-6% when the benchmarks were down. In December, we started falling. January, we started falling. And Feb also, we fell. But have we changed? Our stocks keep changing. The style doesn't change. We will still chase momentum of earnings growth. We see market chases predictability of earnings growth. And market hates uncertainty. Right now, the markets are falling because there is uncertainty of trade wars and tariff. The day the uncertainty ends, even if tariff is 30% or 20%, nobody cares. It's just that uncertainty event should get over. See, the day lockdown was announced, that was the next day the markets bottomed. The day the Fed in 2020, the day the Fed increased the interest rates by 75 bips, on 15th June 2022, that was near that day, the markets bottomed. If you think about it, demonetization and Donald Trump coming in 2016, like November 2016, when Donald Trump, on 8th November 2016, when demonetization also came and Trump also came, that exact day, markets bottomed. So market hates uncertainty and markets loves predictability. So the markets will be 20% tariff, whatever it is. The 2nd April should just finish. Once an event finishes, the markets readjust, and stocks which are not getting impacted, they will start rallying. And where there is predictability of earnings growth, and where the valuations have got cheaper. So the first phase will survive. Because in a bull market, you do end up making some mistakes, but only later you realize that these were mistakes. Like when you're buying it, you don't come to know these are mistakes. Only later things change. There is new competition,
right.
Which is...
So, Amit, I just wanted to understand a couple of things. From the peak, what has the drawdown been in your own portfolio? You said you've raised some cash. So what kind of cash are you sitting on? And the third part, what have you entirely exited? And what have you made fresh entries into?
So our drawdown's been around 18%. So from near our lifetime highs, we've fallen around 18%. I don't know exact numbers, but broadly, I'm telling you, from our broadly around these, it can be 1% lower, 2% lower. I don't know, but around 18%. I think today it was 18% today morning. That is our fall from this thing. I think that is in line with the benchmarks also. About what we have done, see, wherever we've seen new competition coming in, be it food delivery, we've trimmed those kind of positions. We had one exchange in our portfolio. We've sold 95% of that. Wherever other promoters have not delivered, we've said bye-bye to those promoters. Whoever's executing, we're still holding in our portfolio. So we are 80% invested. The next investments that we'll make, we've already made 2 investments in financials. We've made financials near 10% of our portfolio. Financials as in lending 10% of our portfolio. So we are moving slowly towards new trend, new cycle, new portfolio.
What about the
But
cash levels, MS?
The
The
next
cash
leader-
Yeah. Go ahead, Amit.
the next leaders, Nigel, will be very different. And we don't know. See, typically, all bear markets, from Harshad Mehta's bear market to every bear market, has lasted between 9 months to 12 months. On Nifty, on small cap index, it might have lasted 18 months also. But in Nifty 50, if you go history of last 30 years, I'm just giving you data, that all bear markets last between 9 months to 12 months. I don't know, because this is the first bear market where you're falling 5 continuous months. Even in 2008 bear market, you were not falling like continuously 5 straight months. You were falling 3 months and then two months of dead cat, etc. But that's not happening in this bear market. There is no dead cat. In fact, there is new dead stocks every day. So it's a tougher kind of bear market to survive in.
Okay, all right. Hi, Amit. Good to see you in. So 18% drawdown from the peak is what y'all have seen, and also the cash in books is around 15 to 20% is what you said. Is that correct?
It's 20%. Around cash
20.
plus liquid DS, like liquid fund.
Liquid fund. Got it. Got it. Amit, what about how are your clients behaving? I recall in the bull market, you all did very, very well. They were so used to saying, Amit is giving us splendid returns. Now what are they saying? Amit, show us the money. We're giving you more money, or we're packing our bags and saying bye-bye Tata, like how y'all are saying to some of those promoters.
God's been kind for us. At least our customers trust us a little longer. So I think we had very decent inflows. And I don't know, I don't look at those inflow numbers, but those are very large numbers. I think it was the largest in the industry, but that is not my focus area. My focus area is performance. These numbers are, in fact, we have increased our ticket size 10x because we are not chasing inflows, to be honest. We are already at 4,000 crores. We want to focus on performance, not A1.
No, the point I wanted to get at, Amit, was that y'all are seeing inflows, which is good. The numbers... Strong inflows. That's good. That's showing you that people still have a lot of faith, a lot of interest in the markets, and they believe the pain is coming to an end. That's the sole point I was trying to get at.
I wouldn't say that they believe the pain is coming to an end, but they know that if like we do, like they're just betting on us. I think the pain will take some time, and we're telling our clients also it will take some time. And it's when you're going in a bear market after a long time. It's not like bear markets end in 5 months. It may take some time, but it's okay. There'll be a bear market, there'll be consolidation, and then there'll be a bull market. Our job is not to predict beyond the point markets. Our job is to be with the companies, the best 25, 30 guys who are executing, scaling.
Amit, Amit, splendid. And you've been quite vocal as well. At times, you give us a few stocks. Don't disappoint us this time, Amit. Tell us one of those big bets that you'll have taken, one or two of them. It may or may not work, but something that you'll have conviction. Due disclosures come up for our viewers on the screen as well. But this could be a stock that Amit believes, one or two stocks that will do well from here on.
You did hint at a couple of financials that you've
added.
Those are like my protection bets. I wouldn't say, because my cash should go to 30-odd%. So those are not super, like I'm not.
Okay, so for now, capital protection bets, if you can tell us, and then after that.
The growth bets.
Both are NBFCs, the market leader in consumer finance and the market leader in gold finance. These are two new bets that
so Muthoot and Bajaj Finance. Let's keep it simple.
Okay, so that's on the protection side of it.
That is for protection of capital. I don't know how much money we got the breakout. So see these stocks. If you think about 2018 rally, see we are studying bear markets, we are studying books. What to do? There's nothing to do.
Amit, I'll tell you this. I heard you very carefully. I've been holding on to every word. Before we talk about your growth bets, you made a statement. You said and acknowledged very with a lot of humility that in every bull market mistakes are made. You realize them in a bear market and you correct them. What's the mistake you realized that you made in the previous bull market that you've corrected now?
So many. See, actually, these are not mistakes. Things change.
Which I don't know if it's a stock mistake or if it's a style mistake. Yeah,
no, style is not a mistake. Style will also keep going. I'll tell you. Zepto started burning a lot of money very aggressively, and Zepto came from nowhere because from November they started raising a lot of money, and Dipender also spoke about how they have burned 2,500 crores. Of course, they denied it, that they don't burn 2,500 crores, but they are burning decent sized money, and competitive intensity in sectors are changing. Today, exchanges are fighting like I cannot even imagine. Not that we sold exchanges at very good prices, but I'm just telling you, in cola wars, that's happening. So in consumer companies, which were part of our portfolio, they've started to have very strong competitive intensity. And when you have Peter Lynch used to say these things, that in all failed companies have only one thing in common: they fail to escape competition. Monopoly is the only condition of every successful business. This is 0 to 1.
Okay, on consumer, we're running short on time, so I'm just going to quickly spam you with 2-3 very specific questions. You've realized that there is a lot of heightened, competition in the consumer space. You love Trent. You made a lot of money on Trent. I think you even had Zomato for a better part in your portfolio. What have you done with these big names? That's a question that a lot of investors, even investors beyond your fund, they're all asking the same question: what to do?
These stocks are a very small percentage of our portfolio today. What they used to be? They used to be extremely large percentage. At one point of time, both would be around 16%. Right now, they are, I think, less than 5%, but I don't know exact, but broadly even less than 5%.
And what are you going to replace? So these were your growth engines in the previous booming bull market. These consumer stocks, they were giving great growth, right? 50, 60, 70%. So what will you replace them by? Getting back to the original question, what's the new growth engine?
Surabhi, I can tell you the pattern. It's the leader of the bull market is not formed 5 months in the bear market. Typically, it takes some time for newer leaders to get formed and let the newer earnings season come. But they will have high growth, initial low valuation. When we bought a Zomato or a Trent before Pele, the valuations were free. Like today, like we bought at 25p, 30p kind 1 year forward valuations. We don't initially buy at very high P's. We buy at low P's only, which is 1 year forward low P. We make a lot of money because that is how if the stock is growing at 40, 50, 60%, of course there's going to be a bubble. That's how markets work. In 2027, again, if a stock is growing at 40, 50%, it will trade at 100, 150, 200 P's, because every bull market from last 200 years, for last 30 years, be it tech bubble, be it any bubble in history, it has happened because of very high growth and very high, it gets very high P multiple. Again in 2027, in a newer bull market, there'll be newer stocks. They will initially start very cheap, and you have to play them, make money. You have to make money. This is how markets work. We have to work with. Sorry, I stretched.
Right. Amit, very quickly, IGI, something you all had, totally out of it?
We've sold majority of it.
Sold majority of it. All right, because that was something that had a small part of your portfolio. They disappointed on the numbers, and you said, yeah,
no, we sold before numbers and after numbers both. So we keep doing this. We can buy also. So
and why did you sell, Amit? Just to understand, why did you sell? Do you think that the certification business for lab-grown diamonds won't have that kind of margin? Do you think why did you sell IGI?
So first is risk management, which made us sell because we had to cut down our allocation because our risk triggered because of pricing. And then because lab prices went lower to near lab-grown diamond prices, that wholesale market prices are now less than $100 that we know, that we speak to dealers and vendors. So even though lab-based market will become large, certification may or may not become large. And these are emerging monopolies. In a bear market, see, everything changed in January, February. In a bull market, you chase only next 4 quarters of earnings. You don't think too much. If you think too much, you will not be able to make money. Your job is to make the highest money. In the bear market, your job is to protect capital and survive. So in bear markets, the guys which don't have very strong terminal value, you want to cut weights, because the first companies to start a new bull market will be the ones who have very large terminal value.
Right. And just a final word, Amit. In bear markets, investors also say that it's the time to find bets, right? There are people who are greedy when the markets are full of fear. Are you finding anything where you earlier passed on because of valuations and now valuations are palatable, and at the same time there is still visibility of growth? Is there any of those things on your portfolio right now?
We were buying so many names. We are decreasing allocation in newer kind of names all the time. So our game will keep going on. And I have nothing against IGL. If IGL starts growing again, or any company, if a Zomato competition intensity decreases, we'll increase weights. We have nothing against any company. We are just we are just investing in our own patterns. As long as we have that clarity of our patterns are that what works, what doesn't work. We will keep doing that across. And today also we are buying companies. Not like I don't want to be in cash. Cash is not a position, it's an outcome. If I'm not getting stock ideas, I'm not going to force myself into a position and then lose money.
But still a growth chaser, right? That remains the core, the heart of your philosophy. You'll buy growth.
By predictable growth. So right now, predictability is more important than the highest growth rate. Given a 60-70%. So it depends on market conditions, Surabhi. You develop your style that what works in what market conditions. And right now, I would choose predictable growth over...
And not just growth.
So I think the biggest difference between the bull market and the current market for him is earlier he would like growth and now it's
just growth. Predictable growth. I think that sums it up. That really sums it up. Okay, all right. Thanks very much, Amit. Good one. Thank you for fielding all of our questions and look forward to having you back again soon. Well.